Hello, this is Alex Kazmark for thefxedge.com, and this is the free daily Forex video for August 26th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky business, so please don't trade any real money until you have established a proven track record on a demo account. Trading conditions are always changing, so make sure to watch next day's video to stay updated. We talked yesterday about the last 2 weeks of August being very slow. I expect this to continue. Yesterday we saw a very slow day. I expect this to continue until the release of the non-farm payrolls next Friday after Memorial Day weekend. I don't think any of the major market players are going to do anything while everybody's out of town and surprise the market. The dollar got a boost after a better than expected consumer confidence report yesterday. We will be watching German business climate survey, which should impact the DAX index, and then we're going to be looking for clues out of the DAX to see how the Dow Jones will be impacted later on in the day. We're also going to be looking for durable goods orders and new home sales out of the U.S., which are going to be coming out at 5:30 in the morning Pacific Standard Time for the durable goods and 7 o'clock in the morning Pacific Standard Time for the new home sales. We're going to cover support and resistance lines now. We're looking at the euro dollar on the daily graph. Currently trading at 142.95. As you can see, this is already today's candle. We're doing the video just a bit later on in the day. Our candle has changed. Now, if we look at yesterday's candle, we can see that we had a little bit of volatility, a bit of a price swing to our support and resistance levels that we had set up from yesterday. So none of these support and resistance levels have changed, which is why it's interesting to see how we look at these downtrending lines bounce off the downtrend. Bounce off of the support line here near the 142.50 area, and we close the day off very near unchanged levels. I think this is more of a sign of not only uncertainty but low volume. We had a bit of buyers, we had a bit of sellers, and in the end we end up somewhere in between. So currently trading at 142.94. If price rises from here, we're going to look for resistance at 143.72, followed by 144.50. There's not much above 144.50, so if we break that, we'll look forward to either a big run up or perhaps some consolidation around the 144.50 level. But I don't expect that to happen in the next 12 hours. Perhaps after the release of durable goods orders, we may see a little bit of volatility, but again, I don't suspect we'll hit 144.50 anytime in the next 12 to 24 hours. First level of support is going to be found at 142.50, followed by 142, 141.60, 140.80, and 140.45. Okay, let's go ahead and take a look at the pound dollar. If we look from yesterday, it matched this level of support on yesterday's candle at 163.34. So we're going to keep this level of support, and on tomorrow's analysis, it may turn out this level is now resistance. It just depends on what today's candle does. So as of now, our first level of resistance is found at 164.25, followed by 165.41, 65.80, 166.20, and 167.04. First level of support is now at 163.34, followed by 162.74 and 162 even. Below 162 we have 160.33. Now that's quite away from that 162 level. We really don't have anything in between here, so we could hit some stops and have a nice long wick down to the 60.30 level in case 162 is broken. Don't have any news overnight out of the UK. However, I wanted to point out on the euro, keep an eye on the German business climate survey that comes out. I believe this is going to be 1 hour GMT. I'm going to confirm that in a couple of minutes and get back to you towards the end of the video on this. Until now, let's move on to the dollar yen. I moved some areas of support and resistance. We're currently trading at 94.17. The equity markets, I want to point out something here on the equities. The Dow hasn't been able to really close with any momentum above the 9,500 level. I don't know if it's because of the how slow the market has been the last few days, or if it's a case of bulls and bears not knowing where to take the market. Here is the Dow Jones. I'm going to make it a little bit bigger here for you. 1 second. We can see that on yesterday's. Let me zoom in here. This is yesterday's bar. This is the day before. So this is Monday right here. You can see that we had some momentum to the upside, but we gave all of that up, almost closing negatively. Today, almost similar case. We had a very bullish day, broke through the 9,600 level, but look, we erased all the gains. Once again, very near the 9,500 level. This doesn't look bullish at all. This looks like we're going to be heading lower, and I'm going to be focused on targeting 9,000 level first, below the 9,150 level, and below 9,000 after that. So we just have to see what happens over the next few days and see how the economic data impacts the equity markets. But looking at the dollar yen, after looking at the equity markets, we're seeing again a loss for appetite, loss for risk appetite, and the dollar's gaining ground here, or excuse me, the dollar's losing ground here, as traders don't want to assume much risk. That's the reason for the dollar losing strength here. And of course, for the opposite side, the Dow Jones gaining a little bit of ground. So there might be a little bit of confusion here. We just have to keep an eye on what happens. But at this time, we're focused on 93.80 as the first level of support, followed by 93.40. Below 93.40, we have 92.85 and 92.40 as as third and fourth level of support. Our first level of resistance for the dollar is going to be found at 94.80, followed by 95.20, 96, 96.50, and 97 even. With news that Ben Bernanke has been appointed for a second term, we're going to see if that has any impact on the equity markets over the next few days. Again, because the last 2 weeks are typically much slower, it's definitely much harder to read the market, whether these moves have any significance to them. Let's go ahead and take a look at the dollar Swissy. Currently trading at 106.15. We haven't been able to close below the 105.50 level, which is a key level of support. That is our first level. Our second level is at 104.77. Third level is at 104.11 and 103.64. These two levels below 105, actually these three levels below 105 may not be as significant. Those were wicks that we've been talking about over the last few days that the market pushed the dollar Swissy pair down in November. And if you can see, you have to go back to December to see these wicks go down to the 104 level and the 103.60 level. So don't know if we can trust these levels under 105. So a break and a close below the 105.50 level is going to be very significant. First level of resistance for the dollar is going to be found at 106.27, followed by 107, 107.40, 108, and 108.30. Please join us in the members section if you'd like a more detailed analysis with our potential trade opportunities. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for August 26th, 2009. Until tomorrow, good luck trading.